What can a Century 21 agent do for you? They open your home, solve your problems and pat your dog. They provide the service of a butler and the savvy of a business tycoon. Century 21 agents. Smarter, bolder, faster.
Welcome back to Your Property Empire. Now, joining me on the show tonight is Eliza Owen from onthehouse.com.au, and we've just been joined by Charles Tarbey, Chairman and owner of Century 21 Australasia. Now it's time for Purchase or Pass. Now, in our Purchase or Pass segment this week, I thought we'd make the most of Eliza's specialist experience as a researcher into property statistics to get her insights into the pros and cons of different property investing strategies. Now, one of the most common ones is what are the pros and cons of buying in the CBD versus buying in the inner city versus the regional areas. So what are your thoughts on that? And then we'll get Charles's on-the-street thoughts as well.
Well, I think based on recent historical capital growth, you're going to see higher capital growth returns typically in the cities, the CBDs and the larger metropolitan areas. So in Sydney, for example, metropolitan houses had median annualised growth of 18%, whereas our sort of surrounding coastal regional areas, we're doing about 10%, which is still quite strong. And of course, the benefit of the regional areas is that you've got high affordability, and because of that, and if it's a good local economy, you tend to get good rental yields there as well.
So why is that? Because it's always been a big debate that you go to the city for the growth and you go further out for the rent. Why is that, though?
Well, I mean, it's partly because rental yields are a measure of the value of the property, and I think the employment and the lifestyle, employment growth tends to be higher in metropolitan areas, and you do also have to be careful when you're investing regionally, because you have to think about what is the economy based on. Is it a long-term sort of prospect? So for a mining town, perhaps not, but for somewhere like Newcastle, for example, where people have gone from Sydney to find cheaper rents to set up their own businesses, and young families are starting to move out there, and it's really being quite an established regional city that's doing very well. So I guess it sort of depends.
And Charles, we obviously see your stats later on. You've got offices all around the country, so you must see certain things in your stats. Do they back up what Eliza's saying, or have you got a different opinion?
Oh no, well, the city, obviously the density of population, meaning that there are more people here, so there's always going to be more buyers for a particular property. As you get closer into the hubs of the city, you get further out regional, it's not quite as dense, obviously. So you're going to get a slower growth, and then what happens is that the regional areas, they'll catch up. It takes a while for the wave to filter out. It's filtering out now, and then some of these areas will get the growth while Sydney or Melbourne or any of the capital cities might slow a little bit. The regional areas will grow a little bit, and all of a sudden they'll stop, and then there'll be that correlation between the two that existed before a boom started. And then when one starts again, slowly it filters back out again.
And another important thing, as you mentioned, the density of the population, it's important to think about what kind of property you're buying in a regional area. Obviously, if you stick a unit block in the middle of nowhere, then it's not going to do as well as, say, a house that has that attached land appreciation to it.
So, that was going to be my next question, is do you buy houses or units, or does that all depend where you're buying?
I do think it depends. I think it's always, not always, sorry, but it's typically better to get a house where you can, I think. But having said that, the new normal of buying a property is changing, especially as we're seeing populations kind of converge and population become more dense in the cities. Units are a low maintenance, tend to be more affordable way to access having that city lifestyle. Again, I think you have to be careful about the type of unit that you get, the quality of the build, that sort of thing.
So you're saying people in our generation are more going for the units, whereas Charles's generation are going for the houses?
Oh, I think it's the other way around. Actually, a lot of the people in my generation are selling their homes and moving into the cities and getting the lifestyle, Chris. Not long for you.
I thought you were going to say I wasn't in the same generation as Eliza.
You'll be right. No.
I mean, I think it's a bit of both, right? It's like the older generations, and I don't mean to generalise, but I guess people look for lower...
We do all the time. So
people look for lower maintenance, perhaps as they get older and they don't want to handle the garden and all that sort of thing. So
it's happened a lot of generations. It's really right across the board now. People are living, and we don't call them units anymore. We have to call them apartments. We used to call them flats now. They call them apartments.
So what's the difference between a unit, a flat, and an apartment?
I don't think there is.
But they're all the same.
All apartments now.
I use them interchangeably. So.
You see, you lived in a flat because you couldn't afford a house. Now people will move to a flat or an apartment because that's how they want to live. And the explosion of apartments right across all capital cities, across Australasia, Australia and New Zealand, has been absolutely immense. And this is an area that we need to talk about in the future, because we did touch on the fact that off-the-plan sales are going to be challenging for some people, but also really, really good opportunities for other people in time to come. Yeah.
Very quickly, we need to jump to Charles's charts, but very quickly, what's the difference between buying cheap versus medium price versus expensive properties when it comes to growth?
Okay, so the growth rates tend to be uniform across different growth quartiles. So your bottom 20% will generally have the same growth rate as your top 20% in prices, but obviously those are going to work out to be different dollar values.
Okay, sounds good. Well, let's jump to you, Charles. Auction clearance rates. Have we got some numbers this week?
I do this week, I do. Not great in Sydney yet, because I don't think all their numbers are coming through. But Sydney was actually one of the worst performers of all capital cities. But the average was 61.8% across the country in clearance rates. And that's actually the same, exactly the same as this time last year, according to the charts that I've been keeping for the last few years. So Sydney came in at 45.2%. Now, I wouldn't worry yet. Next week, if it does, then I'll start to worry. Melbourne came in at 71.3%, but the winner this week, Canberra, 77.8% clearance rate. Could have something to do with those properties the government had to buy back. But nonetheless, they did very well in Canberra.
Now, hopefully we're seeing lots of new properties coming on the market.
Yeah, New Zealand has really, really been fantastic. It came in at 10.5% in terms of increase in stock. Still a little bit negative over this time last year, but the increase in Australia itself was 4.92%. So the amount of stock on the market compared to this time last year is actually 8.96% higher. So we are going to see that issue of supply and demand being challenged, and that's something we really needed. And
a lot of people have been looking for that for a long time.
We needed it to happen. And as we mentioned last week, the real estate agents need to focus on their ability to negotiate and transactions rather than just open up properties for inspection and hope the auctioneer does the job. It's not going to be the same.
Now, we'll take a look at the rent chart as well, and as we were saying, hopefully we're going to see a bit of a catch-up and rents rising.
Yeah, Sydney had a modest climb. Week over week we do this, so it had a modest climb of 0.28%. The best one was actually the Tasmanian market, had a climb of 0.59%. So it was the best one overall when you look at them. But when you take all of these states together, we had a negative 0.24% over this time last week. So it's still nice and steady. It's not as declining as quickly as people are saying in some parts.
And finally, the vacancy rate as well.
This is the one that really stings in some areas. Sydney was 2.75, great. Melbourne came in at 3.8, that's not too bad. Perth still really, really in trouble in some parts, 7.2% vacancy rates in Perth. Gave us a total of 4.58% over those three capital cities, but Perth is the one that people are watching very closely. It also represents great opportunities when you're seeing those situations occurring.
And again, if there's a high vacancy rate, if you've got the right property and you've got the right property manager, you could have 100% occupancy.
And you look after your tenant. And this is the thing a lot of landlords forget and agents forget. If your tenant's good, don't increase the rent. Actually keep them there and offer to mow their lawns for them. Offer to send somebody over to mow their lawns because they're such good tenants. Not go the other way around, where a lot of people continually try to increase their rent return when they really should be keeping a good quality tenant.
Will you have a chat to my landlord for me?
Sure, give me the number. Might be able to get them across to manage at Century 21 as well.
Perfect. Now, on your graphs before, you put in about the Sydney boom. What's your definition of a boom versus a normal upswing?
Well, I suppose it's just the rapid nature of growth, the fact that we've seen a lot of investor activity, and I suppose Sydney actually has a history of that sort of double-digit growth.
So normally when you get double-digit, would most people describe it as a boom, or is there actually a definition to say that?
I think you could call it the boom part of the cycle, and sort of the peak of the upswing.
Yeah.
Sydney's got growth on growth, so it's going to keep going.
Yeah,
it's going to keep going.
But it's more kind of getting into the conversation about media, because obviously a lot of the media, it's the boom to bust, which some people love and some people it kind of scares them, because they automatically think, oh, if it's a boom, then it's got to crash afterwards.
I don't think it's. I think we are coming into a downswing, and we might even see a fall in value in the Sydney market. But it's part of a cycle. It's part of a very long-term growth pattern for Sydney, because among the major capital cities, that's the economy with consistently high jobs growth, immigration, and engaging with the new economy, I suppose.
And again, I guess where we saw your graphs earlier on over that 30 or 40-year period, there wasn't any massive.
There weren't any massive, but having said that, there wasn't as rapid an increase in prices. So, you know, we might be coming into a bit of a correction, but even if there's a little bit of value loss, probably won't be on the anything on the increases that we've seen.
Wonderful. Well, Eliza from On the House, thanks for joining us. Thanks for joining us, as always, Charles Tarbey. Thanks for joining us this evening. We'll be back next week. Until then, I'm Chris Gray. Good night.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.